Alright, so we're gonna go through a top-down analysis, right? So we're gonna have a Gbpusd, Euro USD, and the XY. We're gonna have to analyze two of those currencies and one index, right? So we're gonna be using a top-down analysis. We're gonna go from daily time frame to 4-hour time frame to 45 minutes to 15 minutes, right? So we have Gbpusd displayed on the screen, right? And as you can see, we have been on an uptrend, right? So I'm not a trend line trader, but this has to show with the direction of the trade, right? So we have been on this uptrend. We've been going up on a daily time frame, and we also have been taking highs and lows. So in an uptrend, we are taking out the higher highs, right? So now we are basically stuck on this pullback, right? Remember, each and every time we take a high, or each and every time we break a high, the market has to pull back, it has to retrace, right? So around 21st August, we've taken this ultimate high, and now since then we have been pulling back, right? We have been retracing to the downside. So now at what point are we gonna turn back again and go up, continue with the trend, right? So if you look into this thing and also applying all the ICT concepts, all the price action and all the price action concepts, right? So on a daily time frame, you can see here that we have these small fair value gaps, right? And remember, we said most of the time a fair value gap is preceding an order block, right? Meaning in simple terms, wherever there's an order block, we're gonna find a fair value gap right after the order block, right? So it doesn't matter which one you find first, but in most cases they go hand in hand, right? So now as you can see, we have been retracing to the downside, right? We have been retracing to the downside, and also we have this order block right here after the fair value gap, right? So what we can do is we can just draw a rectangle on our order block. And remember I said an order block is the opposite candle, is the last opposite candle before the market went into the other direction, right? So now here we have these small fair value gaps, and they're preceding an order block. So remember, all the ITC concepts are still applying here. We have our early buyers taken out, right? And then we filled our fair value gap, and then we reacted on the order block, right? So now the question is, after reacting on this order block, are we gonna continue going to the upside direction, or we just reacted on the order block and then we're gonna continue retracing, right? So the question is, after reacting on this order block, right, are we continue going to the upside direction, right, or we gonna come back and break the order block and then drop? Remember, after we reacted on this order block, it has no power anymore, right? It has no power to hold and to allow the market to bounce on it, if I can put it in simple terms, right? So now we have our fractal high right here, this high is going to determine our direction. Are we going to the upside direction, continuing with the trend, or we're just going to keep on dropping or retracing, right? So we reacted on the order block sharply, and then we left the fractal low here. So these 2 points are the ones that are going to determine the ultimate direction, right? But remember, this is a daily time frame, and to see things clear without bias, we have to also go down on lower time frames, right? So let's go down to 4-hour time frames. All right, so on 4-hour time frame, we still have our fractal highs and fractal lows still applying, right? Remember, we reacted on this order block, right? So after reacting on this order block, we are stuck between these 2 points. So now the question is the order block valid enough to break this high, or it is not powerful enough to change the whole direction from coming to the retracement down and then going to the upside direction, right? So now on 4-hour time frame, we still have our fractal high and fractal low, which will determine the direction. And what you can do is to wait for the market to break out this high, come for a retracement, and then continue going up. Or either way, remember, we don't control the market, we only trade what we see and whatever is happening. So second scenario is that the market can come and take this fractal low and then drop. So the best thing is to look for a retracement around those areas. But then remember, there's also something called a liquidity sweeping, right? So you have to one has to take note of this term, right? Liquidity sweeping, right? Meaning this simply means that if we take out this high in a form of a wick, that is not a break of high, it's a liquidity sweeping. So that it means after taking out this high, we are no longer going to continue going to the upside direction, right? So it means that the market is capable of taking out this high with a wick or a liquidity sweeping, and then it doesn't retrace and continue going up, but then it comes back and take out this low again and actually drop, right? So as long as we must see the candle closing above this high in order to bring more confluences that we are either breaking this high or we are breaking this low and continue going to the downside direction, we must see a candle close, right? Not a wick. Remember, a wick is simply a liquidity sweeping, right? So this is where we stand on 4-hour time frame. We can go to 45 minutes. 45 minutes is still the same thing if we can analyze this trade, right? So okay, remember, we formed this high and then the market went down and then it came back, it retraces. So supply and demand trading is basically looking for a supply zone when the market is retracing, and then you enter around that supply zone, right? So in this case, one was going to take a short around this area, but then remember, precision is more important, timing, being on time, right? So going back, remember we said we formed a high, we dropped, and then we came back and retraced on this supply area, and then we massively dropped to our ultimate demand zone. So now we are here, we are going back after we just reacted on this demand zone, and then the market is going up, right? And then in the process of going up, there's going to be a retracement, right, in the small demand zones, right? So we go down, we retraced at the demand zone, we continue going up. Again, we're gonna go down. Either we are taking this low and then find an ultimate demand zone around this area, then continue go up again. I must say that we have to know our demand zones, right? For example, the market already reacted on this area, right? And also we can pick this as our demand zone as well, right? So now what happens is, if the market comes back and take out this low, right? So if the market it takes out this low, it comes back, and then we're gonna see a change of character. We're gonna have to look at for a change of character in this demand zone, right? And if it's not a valid demand zone, remember the market is just gonna break it and continue going to the downside, right? But remember, we're gonna see the ultimate direction if we can take out this ultimate high and the ultimate low, I mean the fractal low, right? So now it's simply a game of waiting, because it would be not advisable to trade on this consolidation, right? So it's better to wait for the market to take out this high or this low, and then we look for opportunities, right? So I think GBP USD is a bit clear. We can go to Euro USD.